Brad, is it ever too late?
Kevin, look, it's never too late. The only thing I'll say about whether it's too late, I know the tax year's gone, June is over, but you're actually able to back claim for up to 2 years pretty easily, and amend your tax returns to go back and get those deductions if you haven't done it properly or you've missed out on some. The thing about being too late is don't do another tax return because that's one that then you would miss out on. Now that 2 years, if you've owned the property for say 5 years, means you can't go back to the start, you can go back to 2 years. So I guess it's too late to get 5 years ago, but it's not too late for 2 years ago. And the important thing is get it looked at before you go and do another tax return in case you don't want to miss out on another year of back claims that might be there.
Brad, you and I have been talking about tax depreciation now for several years, and we always assume that people know what BMT does, but take me briefly through what BMT tax depreciation is all about.
Well, we're the guy that prepares the depreciation schedule. We're a quantity surveyor, and the reason we get involved in doing these is because we estimate construction costs, and these claims that you get to make actually relate to the construction cost of the building. And the tax office says that they'll accept the estimate by a professional such as a quantity surveyor to come up with these numbers to help work out this depreciation claim. And on top of that, we go out, we visit the property, we identify all of the items to claim. We know about cost estimating, but we also know about the tax rules as well to help to maximise that deduction. So we put together these reports by doing all that work and coming up with those costs. And it effectively gives the accountant a number, an amount to claim, a number, well, there's a few numbers in it, but an amount to claim for this deduction. And we try to make it as much as we can so there's more cash in the investors' pockets.
Yeah, I said at the opening, it's amazing how many property investors don't understand the importance or what they're missing out on with, when claiming depreciation. Can you give me a benchmark? Is there an average that the average investor can expect to get back?
Right. Look, we've just done, not that long ago, done the numbers on the 19 and 20 on the 20 where we've just ended in June, and the average deduction is nearly $9,000 in that year for the depreciation schedules that we've completed. So that's a deduction of $9,000 on average. That's not the amount of cash the person gets, but it's a non-cash tax deduction. So based on your marginal tax rate, most investors at 37 cents in the dollar, then you'll get that percentage of that back. If you're on the higher marginal rate, you'll get the more like the 50% of it back. But yeah, look, across the reports from the year that's just gone, it's nearly $9,000 in deductions. So it's a few bucks.
Oh, absolutely. It all counts. Anyone watching this now and saying, well, I probably couldn't get anything because I didn't have tenants in there for the full year or they left unexpectedly. What would be your advice to them? Is that a fair assessment?
Well, what happens if it's not a full year could be for a couple of reasons. One might be that you lived in it for part of that year. One might be that you didn't actually buy it right from the start of the year. Or maybe your tenants left because could have been COVID-related problems or otherwise. You're able to claim depreciation providing the property is available for income-producing purposes. So if you didn't own it then for the whole year, then you obviously can't claim for the whole year. You claim for the portion where you actually owned it. But some of the rules mean that if you only owned it for a small portion of the year, say you bought it and you settled in June, then some of the things get claimed straight away or quickly up front. So it's often quite a reasonable deduction for even that short period of the year. If you lived in it for some of the year, then it gets sort of adjusted accordingly. But if you've got rental income for part of the year, then you want to write off those tax deductions, obviously, if you can. It's just a matter of if it was only rented for 1 week, then maybe it's only going to have a small amount, but you're going to need it if it's rented out at a later date because we project the numbers each year. The other scenario where it might have been because you couldn't find a tenant, could be COVID related or otherwise. As long as it's available for income producing purposes, the same rules still apply. The depreciation and also a lot of your other deductions are still available to you. The thing to be careful of with that, the ATO come out pretty strong with this as we got to the end of the financial year is if you've actually taken it off the rental market or let someone stay in it at no cost, or it's not actually been available properly for the proper amount of rent or reduced your rent accordingly, then you've got to be careful on the deductions you do make, because it needs to be genuinely available for rent, even if it's vacant. But as long as that is the case, then the deductions of depreciation still stand.
Someone who hasn't claimed depreciation and wants to do so, how do they prepare for it? What sort of information do they need to give you, Brad?
Look, to start with, very simple. With the address of the property, we'd like to have a look and make sure that this property will have enough deductions in there for us to go in and weave our magic that works out how much those deductions are. After that, we'll need to know things like what you paid for it and settlement date, although we'll work that on the way through that process. We need to know who the managing agent is, if you've done any renovation works to the property, and a few questions like that. Then after that, we go out, we visit the property, we go through, we identify and work out what depreciation numbers are there to be claimed.
Pretty simple process. Hey, Brad, thanks very much for bringing us up to date, mate, and all the best.
Kevin, always great to be here. Thank you.